A new report out today predicts a drop in house prices prompted by rising unemployment and high interest rates. Most capital cities will see a decline. Sydney's house price market, though, could fall by up to 4% next year. Joining me now is SQM Research Managing Director Lewis Christopher. Thanks so much for your time. First of all, 4% when it doesn't seem like all that much. I mean, in some suburbs, homeowners and home buyers won't even feel that, will they?
That is correct, Laura. No, we're not in any way predicting a crash next year. It is for a number of cities, modest to moderate declines driven by the elevated interest rate environment. And as our Federal Treasurer discussed, a slowing economy overall, which definitely is a negative for the housing market. But the key reason why we're not going to have a crash is a genuine shortage of real estate. As I'm sure you're well aware, and the audience is well aware, we have a rental crisis on our hands. And next year, according to the ABS, it looks like we're only going to build about 153,000 dwellings. And on our forecast, the population is going to expand by some 450,000 people. So this is one of the key reasons why, yes, it's going to be a negative year for the housing market in our view, but no crash in sight.
No, certainly not. And even if it does dip, and I would barely call that a dip next year in Sydney, it doesn't really counteract the growth that we're seeing right now and over the last couple of months, does it?
I think 2023 has surprised many in terms of the housing recovery. Many in the banking sector were forecasting some big declines this year. It did not materialise. One of the key reasons why it did not materialise was a very strong population growth that we had. That combined with the fact that, yes, interest rates have risen, but inflation rose considerably over 22 and 23 to offset those rising effects of interest rates. But for the year ahead, with inflation slowing, yet it's still an elevated interest rate environment, that'll probably mean many people are actually doing it tough.
Yeah, they are. So what's your more general predictors for next year around the housing market? Well, there might be any surprises. As I mentioned before, it kind of all centres around migration and employment.
Absolutely, it does. It's been a key factor. We take the view, one of our key assumptions for next year is we actually believe migration will slow, whether that's done via federal government policy or whether there's a natural slowdown remains to be seen. But nevertheless, we think there will be a minor slowdown which will help the market in some parts. Overall, we're most bullish on the city of Perth. We believe housing prices are going to rise between 5 to 9%. And we are a great believer in the China recovery story. We think the amount of stimulus being driven by the Chinese central government is equal to what happened in 2008. And that should mean that our base commodity prices will remain at current levels or even higher from what they are now. And the city of Perth directly benefits from that, and Brisbane indirectly benefits from that. We're forecasting a 4 to 8% rise in the city of Brisbane. The city we're most bearish on is the city of Canberra. So we believe the market's going to fall between -8 to -4%. Our view is that the federal government this current financial year is probably going to try and put a little bit of cap on spending and saving some ammo for the election year. And generally, the economy of Canberra is well and truly tuned into federal government expenditures.
Certainly is. Big public service population. Lewis, thanks so much.
Thank you.